Good day, thank you for joining us. I am Armand van der Spey and I will be taking you through the January 2020 PSG Wealth Offshore Fund performance. Setting the macro scene. Global equities as measured by the MSCI World Index declined in January as the spread of the coronavirus reduced investors' appetite for risk. Assets perceived as safe havens, such as government bonds, performed really well. US shares were flat overall, and coronavirus concerns led to a slower start to the year for Eurozone equities. The weakest sectors included energy, materials, and consumer discretionary. Companies with significant exposure to China also underperformed. UK equities fell in January. The end of the month marked the UK's official departure from the EU and its entry into a transitional period. The sterling was volatile, gaining sharply after the Bank of England kept interest rates unchanged. Japanese shares fell as news coverage emphasized the spread of the virus. The yen was slightly more volatile against the US dollar than in recent months, although the actual yen-dollar rate ended January almost unchanged. Emerging market equities also lost value. Commodity price falls weighed on sentiment towards a number of countries, notably Brazil, Chile, Colombia, and South Africa. Government bond yields fell significantly over the month, amid investor caution and central banks reaffirming accommodative stances. The Wealth Offshore Fund of Fund range had a mixed month. Over their minimum investment period, all global fund of funds are ahead of their respective benchmarks in US dollar. Relative rankings remain excellent, with top quartile performance from 4 of our 6 global fund of funds since inception. Over the recommended holding period, which is illustrated by the circles, here we have achieved top quartile for 4 of the 6 funds. The PSG selected managers had a mixed month, with 59% of the underlying managers outperforming the peer group over the last month. Value stocks lagged that of growth for the month, with the MSCI World Value and MSCI World Growth net return returning 2.9 and 1.7% respectively. Looking at the quantitative risk radar, 5 funds appeared on the quant risk radar this month, largely due to the currency impact of the pound as well as the late market cycle volatility. There is 1 fund on the radar due to a manager change which took place. And in conclusion, as you can see, the funds have all performed exceptionally well, delivering strong returns across the different risk spectrums. Thank you for attending this performance update. Please take note of the following disclaimer, and should you have any questions, please feel free to contact us.